Did you know there's a loan program that's available for 97% of the United States and it doesn't require a down payment? That's right. With the USDA Rural Development Home Loan, you can purchase a home with no down payment. Zero down payment is going to be required in order to use this awesome program that honestly doesn't get talked enough about. So that's exactly what we're gonna do in today's video, is break down what is required to use this no down payment home loan program. So stay tuned. Well, hey, what's up everyone? It's Channing, the owner of Bayou Mortgage. In today's video, I'm going to discuss with you this amazing, one of my favorite loan programs available, the United States Department of Agriculture's USDA Rural Development Home Loan. And you're here because you heard me say it's a zero down payment loan, right? So like 70% of consumers say that the hardest part about buying a house is saving up for the down payment. So with the USDA loan, it alleviates the biggest hurdle to home ownership for so many people. Now, I know what you're probably thinking is, what's the catch? Well, like anything, there's not really a catch, but there are some requirements. So we need to talk about those today so that you can decide if this is a loan program you would be interested in pursuing. So let's jump in. All right, so when it comes to USDA, there's going to be three major requirements when we're talking about what they're going to require in order for you to be able to use this awesome program to purchase a house without the need of a down payment. And the first thing that they're going to look at is, do you meet the household income or income restrictions that USDA has set forth in order to be able to qualify for this program? Now, generally speaking, the household income requirements are going to be that your household income needs to be less than 115% of the area median income limit of your location. That's a mouthful, right? That's a big word. Generally, what I see across the country is, if you have a household size, on your tax return, you're filing kids or not, a 1 to 4 household size, the income limit for most of the United States is going to be $103,500. Now, Channing, what is household income? Household income is simply the income of everyone that works in your house. So if you're working and your spouse is working, you can't just put your income on the loan. We have to use both incomes when it comes to the household income limit. If you have a child that's 18 that's living in your home that's working, yes, we actually have to count their income. Same thing with the grandparent or an aunt and uncle. Anyone in the home that is working is going to be included into this household income limit. And it, like I said, generally speaking, if you have a household size of 1 to 4, the income limit for the home, for the household, is $103,500. Now, there's a couple exceptions to this. As you move out into some of the larger areas, some of the more populated areas, some of the more high-cost areas, like on the West Coast, on the East Coast, you're going to look at probably between $109,000 and $121,000. Now, the really cool thing here, guys, is that I'm going to put a link in the description where you can actually click this link. It takes you right to the USDA's website. You punch in your location, and it's going to give you exactly what your income limit is for your area. So you don't have to guess, well, which one is it? Is it 103? Is it 109? Is it 121? And like I said, most are going to be this 103. Unless you live in a higher populated area, which is a higher cost area, like we talked about on the West Coast. I looked at Philadelphia, and it had some $109,000 and $121,000 areas. If you have a household size larger than 4, then let's 5 or more, then you're going to be in like a $136,000 to $160,000 household income range. And again, 136 is going to be the norm for most of the United States, whereas the upper tiers are going to qualify for like the West Coast, East Coast, these higher cost areas where it's hard to find a house under $1 million or whatever the case may be there. So for most of you watching this, you're going to be in 103 or 136, depending on your household size. You need to make, as a household, under that income limit, which is 115% or less of your area median income limit. You've got to be under that as a household in order to qualify right off the bat for the USDA loan. But that is not the only income requirements, right, that the USDA has, because you still have to make sure that you have sufficient income to cover the note just like any other loan program. But the difference is with USDA is that it does have lower debt to income requirements. And so with USDA, your house payment, the monthly mortgage, which isn't just what you're paying back to the bank, it's also your insurance and taxes and your PMI, private mortgage insurance, because you do have that on this loan, that has to be 29% or less of your monthly gross income. If you exceed that and you have good credit, like 680 or above, sometimes they'll let you go to 30, 31, but for most people, you need to be 29 or under, and a good lender is going to run it with those numbers and give themselves a little leeway, in the event that anything could increase during the process, like your insurance or your taxes or something like that. So you've got to be 29% or less of your income needs to be less than that, so that your payment needs to be less than that so that you can purchase that home. And that's honestly a good thing anyways, because we recommend that you don't spend more than about 25% of your total take home pay on your mortgage payment if you don't want to be house poor. So consider those things when you're purchasing the house. You also have the back end DTI limit, debt to income limit, which is not just your housing payment, but it's also all of your other debt payments, any car loans, any student loans, any credit cards, any personal loans, any child support, alimony, anything like that, government debts. Add it all together, cannot be more than 41% of your gross monthly income. And again, like we talked about, if you have a credit score of like say 680 or higher, you may get up to 43, you may even go all the way up to 45, but generally speaking, you're gonna have to have really awesome credit, and you're probably gonna need some reserves. So if you have like a 401k or something that the lender can put on the application to show that you have money saved, then you may get to go to those higher limits. But as a general rule, we're gonna look at 2941 debt to income limits to make sure that you qualify for that loan program. The second thing, the number two thing that you need to look at when you're trying to determine, can I get a USDA loan? Can I get this zero down program with rural development, is credit. Now, here's the biggest myth, right, that we hear on a daily basis from people. Oh, I have to have a 640 credit score to get a USDA loan. And I would say not so fast to that. Right, so many lenders have a 640 credit requirement in order to get this USDA zero down home loan. But guys, USDA actually has no credit score requirements. They have zero credit score requirements on their loans. They don't set a credit score. What happens is the lender that you work with, they set their own credit score requirements. And you're gonna see typically 3 different minimum credit score requirements that the lenders add on to protect themselves to lower the risk. And obviously the most common that you're gonna see is a 640. So if you've been told by a lender that you need a 640 credit score to purchase or use a USDA home loan, then it's technically correct for them because that's what their bank requires. But that's not what every bank is going to require when it comes to getting this zero down home loan. The second most common one you're going to see is a 620 credit score. So we have a lot of lenders that we work with that will say 620 or up. We will take a look at it. We will do it. And then the third one is going to be 580. And we also have lenders that will look at these loans if you have a 580 credit score or higher. I have only seen one lender that says we don't care about the credit score. We're going to look at the deal based on the deal. I've only seen one lender like that, and they're typically not great to work with. They're kind of slow. So they exist. They're out there, but just know it's going to be a more difficult process. And that's going to be the case if you are a 640, if you're under a 640. So know that going into it. It's not impossible to get a no down payment loan without a 640. It's just going to be more difficult because you're going to have to do a manual underwrite. And I'll do another video that fully explains what a USDA loan manual underwrite looks like. But just know you usually need reserves, which is 1 month of your mortgage payment saved up. You're going to need 3 months of your mortgage payment saved up in the bank after everything's said and done. You're going to need 12 months of rent verification or a letter from a family member stating that you've lived with them for the last 12 months, and you can have only had 1 late payment in the last 12 months. So if you can meet those criteria and you're under a 640, then it's totally doable. But the other thing you need to look out for is the interest rate. So the lower your score is, the more your interest rate's going to be, not necessarily like exponentially higher. The real issue comes in is that once you get under a 620, lenders don't have what's called a par interest rate. And a par interest rate means an interest rate that doesn't cost you money out of pocket. So it's very difficult to find a par interest rate on a USDA loan if it's under a 620. So if you're a 580 and you want to get a USDA loan, the interest rate alone may cost you $2,000 or more, which could be a big deal if you had to pay that out of pocket, but there are ways around that, and we'll get into that. So just know that from a credit perspective, there is no 640 credit requirement. 640 is the requirement to get an automated approval, but even then you're not guaranteed to have an automated approval because it's looking at your overall credit profile. So you don't have to have a 640, but it is going to be easier if you do have a 640, but it is not impossible if you don't. Now, you may ask, what about other things? Does USDA allow you to buy a house if you've ever filed bankruptcy or had foreclosures or any other credit issues? And the answer is yes, they very much do. They follow similar guidelines to FHA, so they're very flexible about prior credit events. So if you filed a bankruptcy, then you can still be eligible to get a USDA home loan. There's going to be waiting periods. Generally, if it's a Chapter 7, it's going to have a longer waiting period. We'll do another video on that, 2 to 3 years. With a Chapter 13, there actually is no waiting period. You just need to have made 12 months of on-time Chapter 13 payments. And again, it's going to be a manual underwrite. Foreclosures are the same way, 3 to 4 years. Short sales, 3 to 4 years. If you've had collections or charged off accounts, you're also going to be able to purchase a home using the USDA loan. They just factor them in. So charged offs, they don't factor at all. If your collections are medical, they typically won't factor at all. And if you have less than $2,000 in collections, they won't factor at all. For anything above that, anything more than $2,000 in collections that are not medical, they're going to take 5% of that balance and apply it to your debt to income. So the short answer is yes. I'm going to do a whole video on how to get a USDA loan if you've had bad credit or prior credit issues. So I won't jump into too much detail in this video, but I will link to that video as soon as it's available so you guys can check it out and watch it. But yes, USDA makes room for people that have had prior credit issues. All right, now the third and final requirement, right? The top 3 requirements that you're looking at when it comes to do I qualify for a USDA Rural Development Loan is you have to purchase a home in an eligible area. Now, a lot of people have a misunderstanding about USDA loans that they're somehow, you got to go be a farmer, right? You got to trade in your polo for some overalls and your Nikes for some work boots. Well, that's not the case, because USDA is not saying you got to go live on a farm and start milking cows or do anything crazy like that in order to qualify for this home loan. In fact, USDA wouldn't even let you buy a working farm to begin with. But when it comes to USDA rural development, it's simply their term rural is very liberal. With USDA rural development, generally if the town has less than 20,000 people, and in some cases up to 35,000 people, it's going to qualify. And so what this means is that in a lot of cities across America, the suburbs outside of the major city limits are going to be eligible for this program. So if you're willing to extend your commute into town, if you have one, so many people working remote now, if you still have one, then you're going to get the ability to purchase a house with no down payment and still live within a suburb that honestly you probably wanted to live in the first place. So the definition of rural here is very broad, and most places are going to qualify. Like I live in Louisiana, and pretty much every suburb of every city is going to qualify, and then of course all of the smaller towns throughout the state are going to qualify too. You go to somewhere like Houston, where it's a lot more populated than Louisiana is, then some of those suburbs are not going to qualify. In fact, most of the suburbs are not going to qualify. But if you're not in a major metro, we're talking Chicago, Houston, LA, New York City, like some of the, where there's just a ton of people living there, then most of your suburbs are going to qualify for this loan program. So I'd really encourage you to check it out. I'm going to leave another link in the description where you can actually look at what areas are eligible to purchase when you're looking at these USDA home loans. And keep in mind, remember, like I said, over 97% of America is eligible. It's located in an eligible area for USDA home loans. So listen, that's the 3 major requirements for USDA home loans. I would encourage you to consider this as a loan program. It's a great loan option for those who don't have a large down payment, or maybe you've barely saved up a down payment, but it's all you have. I would encourage you to look at this program instead and keep that money, save that money for a rainy day, for repairs, or whatever it is you're gonna need. So as always, if you have any questions, drop a comment. I love engaging with the community. Like this video and subscribe to the channel, please. It helps me reach more people just like you. Talk to you soon.